So we'll move on to condotels. Condotel is a hybrid property that allows for both ownership of a condo and the flexibility to rent out its units. And like I said before, a really quick way to identify one of these is if they have a front office, and then you can go there and check in and rent a room, like a motel, same kind of thing. So on these, we can go up to a 75% LTV on a purchase. That means they need a 25% down payment. We can only go up to 65% on a refinance. The qualification is based on short-term rental income. This is sort of a hybrid of the DSCR calculations. So no personal income or employment is needed. We can go up to the 40-year interest-only term on this too. The borrower also, again, must own a primary residence. They can't just buy this to be their only property. We can go up to $1 million, 150,000 minimum. Credit scores starting at 700 on these. No limit on total numbers of properties. Pretty much everything else is the same on the Condotel purchase as the DSCR program. So we can do delayed financing. You can close in an LLC. It's got to be a minimum of 1-to-1 ratio, carry cost versus rent income. And on this one, foreign national loans from any country are not available. This is for US only. And I believe also a permanent resident alien can also do this. Foreign national just means that, you don't have any form of citizenship here in the US. So those are condotels. Those are relatively newer to the market. Traditionally, condotels have been very difficult to get financed just because of the risk perspective again. So condos are getting harder to do in Florida as well because of construction issues. Bless you.
Thank
Construction
you.
issues, safety issues. That terrible tragedy that happened in South Florida a few years ago with that
Mhm.
condo collapse really sent ripples through the industry, and associations are tightening up on vouching for the structural integrity of their buildings. We run into problems a lot where association management companies will not say that we are structurally sound, or they refer us to another inspection, and insurance issues have gotten out of hand with them. So condos in general are already riskier than a townhome or single family home. And then condotels on top of that are even more risky than condos. So they've always been kind of a fringe product. And you can tell the risk tolerance here because you're only getting a maximum of 75% loan to value and credit score starting at 700. So if they had a bigger risk tolerance, then you might go up to 90, and maybe you start credit scores at 660 or something like that. So you can see how condotels they're a little tighter than everything else, but when they make sense, it's something else that you can offer to a client. And if they're looking for some kind of investment property or a condo or a beach unit or something, then a condotel might be a viable option for you today, where it wasn't a year or two ago.